My friends, let's do this. Welcome back to the channel. So if you haven't already, follow me on Twitter, Colin_Gladman. You can see I just posted. We had ourselves a nasty little leak going on. Our girl's shower from upstairs, I guess, was leaking into the downstairs, which right below that is the kitchen. And so anyway, I tweeted out I may not get it done today, but a promise is a promise. And so this is going to be my weekly outlook as far as what I think is, some of the most logical steps for AMC to take this week. As always, I'm not a financial advisor. Everything I'm doing is for educational purposes. And if this video is helpful, please like and subscribe. Tell your buddies about it. Let's educate as many people as we possibly can. Also, too, like I always say, at the end of the day, you are the one who is going to be stuck with your portfolio. So make the best decisions that you possibly can for you and your family and your portfolio. Because even though I get the whole community thing and everything like that, at the end of the day, it's going to be, you and a buy button or you and a sell button. So always do what is best for you, not what me or any other person on the internet tells you to do. Okay, so this is going to be my weekly outlook video, so I just kind of go over everything that I want to. If you like more of kind of the cycle theory, if you will, I put out a video yesterday based on my thoughts of what potentially might happen with the cycle theory. So this is going to be, some of your more usual indicators that we're used to when it comes to technical analysis as far as, trend lines, indicators, things of that nature. But let's go ahead and jump on in. So if we take a look at AMC's chart, okay, the first thing that I want to start talking about is going to be our massive bear trend line that we have been under for the most part since our all-time high of June 2nd of this past year, okay? You can see, yes, we have broken out of it a couple of times, but they have always been, failures as far as the breakout is concerned, mainly because there's just never been really any volume going along with it. So I'm going to go to the daily chart here real quick. Right here, we'll get into that here in just a second. But if you look at the daily chart, every time we broke out, we had terrible volume to go along with it, okay? And you can see even in November, once again, this is where, myself and many others thought we were going to be squeezing because we had the breakout. We came back once we had the retest here on November the 11th and started pushing back up. I was fairly confident at that point in time that we really might be pushing towards new all-time highs. The biggest concern was always the volume and yeah, well, we know how that played out. Then we had our big rejection here once we tried to get above it on December the 8th. Another massive rejection here on December 21st. And now we have been rejected off of it another time here on March the 23rd. And the only bad part about that is the March 23rd volume was nice volume. It was 170 shares. 170 million shares traded on that volume. So that is the only thing that even, remotely gives me a little bit, of pause, for concern as far as that goes. So getting above this overall, bearish trend line with some volume is the big thing that I'm going to be looking for. Obviously, we've got our support that I've been talking about ever since January the 27th, I believe, is when we came down and touched it. Okay, so this is my other chart. This one's a little bit different, but it would have been January 24th. Okay, but it still pretty much works the same. So coming down and retesting is definitely a possibility. That would take us down to like that $17 range, but I don't think that's the most likely case. And like I always say, for my channel, I deal with what do I think is the most likely scenario. And I do think the most likely scenario is going to be bullish, okay? Only if, something crazy happened in the market, news came out, anything along those lines do I think could potentially change that. If we still kind of see an overall small and mid cap recovering market, then I think AMC is going to keep moving right along with it. So the first thing I want to talk about today, well, I guess technically the bear trend was, but second thing I want to talk about today is going to be how we pretty much played out a picture perfect accumulation, Wyckoff accumulation right here. So if we jump in here, this is what the schematic looks like, okay? So you have your selling climax, your automatic reaction, a sell test, then we sell test phase B, then we spring, test, last point of support, moving up into the SOS phase, and then you get some backup last points of support before we move up to the markup. Okay, now that can fail. Okay, the markup cannot happen. We've definitely seen and had that happen before, but most likely this is what we're looking at. And if we look at the volume that goes along with it, so here would have been like the sell test in phase B. Then we have the push up to our supply zone. So we've got the supply zone here. We've got the demand zone down here. So the spring happened right here. As you can see, a brief break below the demand zone. And what was good about this is the drop, the spring itself was all very low volume. And then the push back up into the demand range was all done. There was significant buying pressure. Then we had right here, we had the last point of support. That last point of support touched our long-term trend line, and then we pushed up into our SOS phase. The push up on the SOS phase happened on increasing volume, and now we're just kind of backing up here to our last points of support before potentially the markup. And as you can see, that would essentially take us through the downtrend. So from an accumulation standpoint, the first time I tweeted out, man, I'd have to scroll back, but it was like right back in here around mid-February. But it takes a little while to play out, so I haven't always updated on it, but this was from, my original drawing and everything like that. Like I said, I definitely tweeted it out right around mid-February is what I was going to be watching for as far as an accumulation standpoint. There's an accumulation both with and without a spring, so I didn't ever really know right here if this was going to be kind of we would move up from here or if we needed this spring. And it turns out we did the spring, okay? So now, if we look at it a different way, so I got made fun of a whole bunch whenever I pulled this up and I flipped AMC's chart upside down. Okay, I'm actually going to let's go to 4 hour. So I flipped AMC's chart upside down. Now, the opposite of accumulation is distribution, okay? So if we come over here and we look at the distribution schematic, right here. So look at this one right here. Distribution schematic 1. Now we go back and look at AMC's chart. All right. It's pretty much a perfect distributive pattern. We have this massive rise on little to no volume. Once again, if you were looking at this chart, it was normal. So once again, this is AMC just flipped upside down. But think of it if you were looking at this chart. You would see from here essentially a 80% move on little to no volume accompanying it the entire time. Okay? And in fact, anything right here, the bigger volume would have been the selling volume. Okay? Which obviously, once again, it's the buying volume. But once we get here, and you have your UTAD test, now go back to AMC. A little bit of a push up here, UTAD test. The volume wasn't there. Now it's starting to fall out. And if it's starting to fall out, look at what the volume is doing. The volume is increasing as it's starting to tumble down. Okay? So that's what I was looking at. That's what I was trying to say the entire time is AMC flipped upside down was looking very distributive. Okay? So you can see now we might have some areas of some, last point of supplies, things of that nature before, continuing the mark down or AMC flipped over the mark up phase. All right. So there's going to be some, catching along the way, if you will. Where's the little path tool? Here's a little path tool. So, we might come up here, get rejected again, come down here, retest, then push out. So we might, see some of this going on, but overall, I think this is a very reasonable look of what the future could look like. Okay, now obviously, things get triggered, shorts start to, get out of their positions, anything along those lines. It can happen much faster. But once again, we didn't lose 80% overnight. Okay, we lost 80% over a 6-month period. So if it takes us 6 months to get back to that 80%, that's what it's going to take. I don't know that it will take that. My guess is that we would definitely move faster, especially if some type of catalyst, we're not anticipating comes out, anything along those lines. So, moving back up here, I think that's definitely what is going to happen. Okay. And you can see that this rejection too pretty much came from right here on our last day where we had, oh, whoops, let me go. I'm going to go back to the daily real quick because I just like to see what the volume was, on the daily. So this day was like 107 million volume. This acted as support, so it's also not a surprise that we got kicked off this, because what was support, turns into resistance. So a few more touches here before we actually get the breakout. But once we get the breakout over this line, with some solid volume, and my overall bias will definitely be to continue on up to the upside, even if it takes a little while to grind out of. And barring any type of, gamma ramp or gamma squeeze, anything like that, I always said I thought we would have some grinding that we needed to do. Mainly because if we look at our indicators, so I'm pulling up the visible range right now. So you'll be able to see, I'm going to go back to AMC. This is its entirety, since it's been traded. So right here in the 20s, it's just some of our most least traded area. So I know everybody's saying, oh, we get over 22, we're just going to fly through it. And we definitely can. However, I think it's more than likely we're going to have to do a little bit of trading and grinding down in here, because the composite man, if you will, is going to want to explore the buying and the selling pressure that's going to happen in these areas. I'm going to jump in here and add a couple more rows to this real quick. So right here, guys, you can go into the settings, and where it says row size, it's set, its default is 24. I always do 200. I mean, you can put it on whatever you want, but this really allows you to see, kind of where specifically at some prices, more and more gaps, look like. And so even if we go over here, so where the visible range measures your volume and your buying and your selling pressure is going to be from the candles on the left side to the candles on the right side. So that's why I always kind of look at this. That's why I made the case for the $10 is coming down here and potentially touching it. It's just because once I'm kind of was always like to look at it, where did retail, really get involved? And retail, really got involved obviously in the kind of that January run up. So the point of control was always at this like $10.50 area. So that's why I always made the case of, I think that would be our absolute lowest. Now, I always said my bias was, right around here, this $13 to $14 range, right here, our two big peaks that we had. What was really hard to break through right here would be ultimately our areas where that would be our bottom area, and then we would push back up. And so far, that looks good. I mean, obviously anything can happen, but so far that's looking like a pretty solid thesis. So moving back up here, over the bear trend. However, this, even you can see right here, especially from 20 up until, really about 28 is some of the least traded areas, other than, of course, all-time highs. And yeah, I want to go to that gap too, all right? But we got to have a little bit of patience. But this area, if we kind of hung out and sort of took a little bit of grinding to get out of here a little bit, I could definitely see that as a strong possibility, okay? But if this plays out, this accumulation plays out, kind of like I was saying, we would, maybe back up a little bit. And we could also come all the way back down, to, like I said, right here towards the support, and kind of do one of these before actually, getting our breakout and our markup. And I've always kind of said I thought that this markup, this sign of strength markup, would take us up into maybe like that $28 to $32 range. So in my cycle video yesterday, that everybody was just, in my opinion, unnecessarily freaking out about. So when we make our way back up here, we're going to need some solid volume in sort of this $34 to $35 range to break through, because this area, this whole trading range right here, okay, oops, grabbed the wrong thing, didn't mean to do that. So kind of right in just this range right here. So let's say 36 to 32 range. Right in there has been, and you can see that's where we got kicked down. Then we tried to come back up, break back up into this trading range. So this trading range right here is going to be very important. Let me make it a different color so you can see it a little bit better. It is going to be an important range to hit with volume. Otherwise, coming back down this way is a real possibility. Now, that's not my bias. It's not my most likely scenario, but it is a possibility. So if we kind of did this, then we, came up here, then we got kicked off of this, coming down here, we might need to retest, and then, we could come down here, then push back up. So that would add into the time that it takes to get AMC to, some new all-time highs, okay? Once again, not my most likely scenario, but everybody needs to keep that on their radar. So if we hit this area though, with some solid volume, and then we make a new sign of strength, right up here. So this upper trading range, if we can get a new sign of strength going on up in here and kind of, trade back and forth, then I think we could definitely be ready for a new markup phase. Okay. But like I said, that is really going to all be dependent on the volume that comes with it. If you followed me for any amount of time, you guys know that I always say from a macro basis. So I don't trade, AMC. There's other stocks that I make trades in. Mullen, I made a swing trade with. BBIG, I'm in right now. AMC and GameStop, they're my buy and they're my holds. And honestly, for me, that goes back to when the buy button was taken away. That still to me is mind-boggling that happened. So of course, my family is my why, but that was just such flat out robbery in broad daylight in front of everybody. And it was almost one of those is like, they just flat out robbing people and they don't even care. Like it was just a big FU. We are doing this. We are, looking out for ourselves and our ambitions, and screw retail. Excuse me. That is really for me, if you will, when I was like, okay, this is personal, if you will. And I'm a stubborn SOB. So it was I'm all into, buying and holding. So when looking at AMC or GME, that's just what it's going to be for me. Now, also, too, if we do start squeezing, my friends, everybody needs to have their number. Don't listen to me. Don't listen to, anybody else. And I'll jump into that here in just a second, because I'm going to kind of go over, what I think, some all-time highs are going to look like and how that's going to be. But everybody needs to stay, calm in the meantime. So we got to get over this big bear trend. Once we get back up here into the 30s, we need to see some good volume to break above this trading range, give us our sign of strength before we're going to be ready for the markup. And like I said, that can happen quickly, okay? That doesn't mean it will. It just means it can, all right? We might need some catalyst or some outside forces or anything along those lines. Honestly, I'm more invested in AMC than I am in GameStop, but GameStop looks stronger than AMC. And so if GameStop, really starts ripping and it pulls AMC with it, then that's all good in my book. I don't care. All right. So now we're going to go over here. So this is going to be, I don't know why, every time I switch over here, Mullen always pulls up. Sorry about that. So now let's look at this chart, okay? So it's going to be the same. Like I said, here's where you can see I had it since January 24th. Yeah, that's support. So now what I want to talk about is going to be what... Actually, sorry. You guys know the deal. I don't want to plan these videos out. Before that, let's look at indicators, okay? So from a Bollinger Band standpoint, we needed that period, like I said, of low volume and consolidation before we could start, really breaking out. Now we start to see the Bollinger Bands widening. That is, as you can see, anytime before we have volatile moves, you see those Bollinger Bands start to widen. Okay, so they are starting to widen. So we'll and they're widening in a good way. We're going up, and they're getting wider. So that's a good thing to look at. As far as the EMA's concerned, let me get rid of the Bollinger Bands. Whoops. So as far as the EMA is concerned, pushing up, I don't even know how long it was, but I said that it was like back in here. I think it was right around January 24th. That I said the 200 and the 100 EMA would pretty much track that bear trend line. As you can see, the 100 is just right above it. 200 has gone a little bit higher than that. But looking at regaining the 100 and the 200, so the 100 is going to be sitting right around $23. The 200 is going to be sitting right around $25. As you can see, the 20 is starting to curl up. So, once again, these are all the really good signs that you want to see. We want to see this 20 crossing over the 50 and so on and so forth. And as of right now, it is curling. So the EMAs look great. I personally have not been tracking. I see everybody talking about I think it's the 13 and the 48 EMA. That's something that I'm still doing some more research on. I haven't, been tracking it as much, but everybody's kind of saying those are about to cross, and that's obviously a very good bullish indicator on that. Just don't pay somebody for that knowledge. You can look it up yourself, my friends. I saw the drama going on about it. Stupid. Anyway, RSI. So RSI is getting a little warm. Okay, we got room to run. Okay, I'm not saying we don't, but it is starting to get towards the top of the range. Once you can see historically AMC, and this is where I come back to doing what's best for you, is historically AMC. Once it hits about 95 on the RSI on both the January and the June run up, so you can see it right here. Plain as day, then that's where both massive pullbacks have happened. That doesn't mean that it's going to happen on the third try, okay? Maybe third time's the charm. Maybe that's when moaz happens or whatever. But, that is something to keep an eye on. Now, once again, I will just continue buying and holding until I have my number, but that is something to keep an eye on. As far as the MACD goes, it has crossed. It did cross on the daily. All right. And it's looking good. No sign of, the momentum looks real good in the stock right now. What I tweeted out earlier is on the weekly, we are starting to push up and potentially could get the cross on the weekly MACD. And so obviously that would be huge. The last time that happened, as you can see, is going to be all in our, big run-up periods, okay? Back in January, that was the last time that the MACD crossed over on the weekly. And then it stayed above it, stayed above it, stayed above it, and then once it went below, you guys know the deal. We've been in a downtrend since. So that's an exciting thing to keep an eye on as well. Let's look at OBV. So on balance volume represents the buying and the selling pressure in a stock. This is going to be on the 4 hour. And as you can see, it's right at AMC's all-time highs. Okay? So the OBV essentially, just think of that. Sorry guys, people keep texting me, so I'm moving my phone. Um, so as you can see, the OBV right now is up where when the price was when we were at all-time highs. And so we've had a massive, divergence going on this entire time where it's just this freaking, you know, price, if you will, just doesn't match. Excuse me, the OBV just doesn't match what's going on in the price of the stock. This is why I've been preaching, patience, 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 and more patience. Okay, so you could even look at this right here. At pretty much every time we've hit, bottomed out on this white trend line, we've had a bounce back up. Other than right here, and I mean we are knocking on the door right now. So, like I said, overall biased is, I mean, I'm bullish in the short to midterm, no matter what. I think we're going to see a run. Now, whether or not we get, a gamma ramp, a squeeze, anything along those lines, once again, for me, that always comes back to volume. All right. So, last thing I want to talk about, guys, is going to be how I figure all-time highs. I keep having people ask me about price targets, and so this is what I'm looking at. Okay, and this is excuse me. Let me back up. This is what I'm looking at as far as potentially next leg up. This is not me talking about moaz. Excuse me again. If you follow me, the only time I address moaz is going to be a trying to predict something that has literally never happened before. I think is somewhat foolish, and it's more about your ego. And I always say the smartest people that I know, when they don't know, they just say, I don't know, man. And so when it comes to moaz, I'm just kind of like, I don't know, man. Now, I will say this. The people who talk about, 500,000 a share, a million a share, or anything along those lines, that is where you lose me. That is not even remotely likely. In my opinion, I'll be honest, I'll miss out on those numbers because I would be selling shares long before that. Okay. But everybody needs to have their number. You need to have a plan. The saying is, planning, failing to plan is planning to fail. So, whether it's you and your wife, if it's just, you need to have your own number. And in my opinion, you need to stick to your number pretty much no matter, I don't want to say no matter what happens, because always new information could come out or anything along those lines. But assuming you have the same amount of information that you have right now, I highly recommend, sticking to your number. Me personally, I will be scaling out of my position. I will not just hold my entire position to one number and then dump it, if you will. I will be scaling out of my position, okay? That, in my opinion, obviously that's a good way to do things. So that way, you're taking profits on the way, just like I did with my Mullen trade. I constantly took profits along the way. But at the end of the day, you need to do what's best for you, and you need to have your numbers. So how I'm looking at the next leg up. So once again, this is not talking about a moaz. This would just be if a leg up happens. Once again, is going to be based off of what has happened before. So this is where I use the trend-based extensions for Fibonacci. So right here in January. So I took it from the low on March 18th of 20, so pretty much the height of COVID fear, to when we kind of thought, hey, we're going to be, maybe starting to get back to normal, and then back to the new low. You can see the 3.618 was $22.72. And in pre-market, I actually think it went over that just a little bit. So the 3.618 is going to be where we went to in January. Okay? Now, do the same thing for the June run up. So where you would take that from is going to be your bottom from January 4th to your top, January 27th, back to your buy button collapse, February 22nd. And that one is going to give you right here. So the 3.618 on the June run up was $71.93. I mean, just literally almost perfect. The 3.618 called it. Okay? So, on the next leg up, you would take it from your buy button collapse to your all-time high to assuming this is our low right here, that $12.90. And the 3.618 is going to give you $256.41. So if a similar move happens as what happened to the January run up, and then in between January and June, that run up, if our next leg up looks similar, I think the 3.618 of $256.41 is a very, and that's a range, okay? It could go a little bit higher, could go a little bit lower, but that is going to be the range that I would be looking at for the next leg up, okay? Now, I have always kind of said that I do think AMC might and GameStop might make kind of Tesla styles moves, which Tesla very heavily shorted stock, in its infancy stages. And then it kind of basically, go back and look at the chart once it started moving, it basically started doing, rolling gamma squeezes. So, let's just pull it up here. So once again, this is going to be Tesla, and it's gone through, at least one stock split of 5-1. So, it started, all back in here, then it had its first big move up, the 40s, and it traded in this range from from February of 14 to October of 19. So for 5 years, Tesla essentially traded in that range right there. Okay? Right there. 5 years. Then it started really moving up, and like I said, this is that kind of series of rolling gamma squeezes. And they did some stock splits along the way, everything along those lines. I absolutely love Tesla. I love their cars, and I own a ton of shares of Tesla. And so I have always said, and once again, it was a very heavily shorted stock. So I always said it wouldn't surprise me at all if, let me put it this way, I would be surprised if the moaz was just a completely uncontrolled squeeze situation. Several legs up, where you find out where retail is really willing to sell their shares, to me is what makes the most sense. Now, I could be 100% wrong, and it could just be, this nuclear bomb, and it just goes, straight up to infinity. But in my heart, I just don't believe that's the case, okay? I think we could see a moaz, but I think the moaz, to an extent, would be a controlled event with several legs up. There would be probably some price halts going on. They would constantly be grabbing the tree and shaking it, if you will, to get retail out. So, once again, have your numbers. Don't listen to me. Don't listen to, any other YouTuber. Listen to here and listen to here. And if it feels good, then it feels good. And you and me and this entire community have been in this play for too long to not reap the rewards of your time and your energy and your effort and your mental health and probably, your physical health, so on and so forth. So if we start seeing big moves, like I said, I won't be answering, well, where exactly are you going to sell? What do you think? Or anything like that, because that's just not wise on my part. Because, like I said, if it keeps going way higher than what I told you, you're going to be upset with me and you're going to be upset with yourself. So at the end of the day, and no matter what, I mean, it's just you need to take responsibility for your actions. You're going to be the one who pushes the sell button. So at the end of the day, you got to live with it. But just don't listen to a ton of outside forces that are telling you to hold to. I mean, if the number sounds crazy to you, it's probably because it's crazy, in my opinion. And once again, I know I'll catch flack for that, but ask me if I care, because I don't. All right, I'm going to sell exactly when I want to. I'm going to scale out of my position, and I'm going to call it a day. And I have every intention of, no matter what, holding some shares for my moon bag in case I'm completely wrong or anything along those lines. I'll take the crazy ride with you, but it's not going to be with a ton of my shares, because I have literally thousands of shares and I'm going to take profit on them when the time comes. But that time is not here. And the reality is, until we're even up here at a new sign of strength in that kind of $45 to $55 range, there's really no reason to even talk about it too much. I just know everybody is super excited right now, and for good reason. We've got a nice textbook clean breakout, and so everybody should be excited. But the reality is not everybody in this play is an ape. And when you play a falling wedge breakout, I'm just drawing this quickly, guys, so it's not going to look perfect. When you play a falling wedge breakout like this, most technical traders will play it up until the original point right here where it actually started. And then there could be some consolidation before another move up to up here. But a lot of people will take profits, especially people that entered down here. A lot of people are going to take profits along the way. I see people all the time saying, if it just gets back to 30 and I can get my money out, I'm getting out of this trash stock and everything like that. So that is going to happen. Now, do I believe that the large majority of the people are going to, keep buying and keep holding? Yeah, I really do. I don't think until we see the hundreds at least, are people really even going to consider, people who have been, diamond handing this thing for a long time. If you truly did not sell anything, back up here, in the 70s, I can't imagine you sell anything, up until the, mid to upper hundreds or anything along those lines. But, once again, at the end of the day, everybody needs to trade their plan that's best for them. So if we go back to seeing just mediocre volume, I think kind of being range bound this week, even a dip down to 17 at some point, so coming down here, consolidating before ripping back up, I think is, definitely a possibility. Our next line of resistance is going to be kind of right in here, this sort of $26 range. We're going to have a little bit of resistance because obviously, as you can see right here, that provided support for a while. So if we get the break here, I would imagine if we do get sorry, let me back up. If we come up here, we get rejected, we might come all the way back down here for a test, then come back up, rejected one more time, but not all the way back down before pushing back out. That's kind of one scenario I could see this week. That would make a lot of sense. That would be kind of my more neutral scenario. Pretty bullish would be, maybe early this week. We break out, we come up here, we hit this $26 range, get kicked back down, either come back down here and test. I mean, this has been such a bear trend. I really don't see a way that we break out of this and don't come back and retest it at least once, and then kind of start, moving on up here. Yeah, somewhere, super bullish this week would be getting us up here into the $30 range. And the reality is last week, we pretty much moved from the 15 to as high as 22. We saw a $7 move. Okay, so we could see that again. That would be putting us at like 27, 28.50, right around that ballpark. So that is definitely possible. And with tons of volume, all things are going to be possible. So That pretty much sums it up. Sorry, I know this is a long video, but just wanted to get as much information out as I could. So be safe, be smart, have your number if things get crazy. Do what's best for you and your family, because once again, at the end of the day, you are the one who is stuck with your portfolio, not me, not anybody else. So, I mean, I wish everybody the best of mental strength and the best of physical health. And you've come this far. If we do get kicked down or anything like that, just stay strong. I truly believe no matter what, it's just a matter of time. Okay? We all got time. Obviously, we want it to squeeze, but we got time. So, stay calm, chill, be mindful who you're listening to. You know, talking about this stuff, people that throw out ridiculous numbers, that's just unwise, in my opinion. So that's how you turn people into bag holders. And we won't be doing that on my channel. You guys know the deal. We keep it real. If this video is helpful, please like and subscribe. And other than that, I'm sure I'll be seeing you early tomorrow. Let's have a great week.